You could see the gold price get to as high as 2,800 on an annual average price, nominal, by 2024 or so. Silver prices, we have them going up to about $46.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Jeff Christian from the CPM Group. Jeff, thank you so much for joining us today.
It's good to see you again, Elijah.
Definitely. Great to see you as well. Now, I'd love to discuss the gold and silver markets because after the election, we saw a bounce in gold and silver. They went up quite a bit, but now we're seeing them fall again. What is your take on the volatility we're seeing right now?
Well, the volatility should be expected to continue. And the election obviously had something to do with it. And I'm proud and happy to say that we really called the election effect on gold and silver prices very well for our clients. But there were like three sets of big events, and it's the complex sets of issues. Well, the first one's not that complex. It's the pandemic. And it has major negative economic, social, and political problems, implications globally. The second one is the economic recession. And that's partly an outgrowth of the pandemic and the lockdown. And then you have to have all sorts of issues about the recovery. And the third one is trying to find a way not to use the word mess, but the global political situation. Because globally, the political environment for people has deteriorated sharply. There's been a rise of autocratic rule, there's been a rise of demagoguery, there's been increased nationalism and nativism, a breakdown of international cooperation. There are a host of domestic and international political issues that are very problematic for individuals. And in all three of those things continue. None of them will be resolved by the election in the United States. And all three of them say to investors around the world, I should own more gold and silver. So, our take is that the election is interesting and it has important implications that we have to sort through. And we've been telling people for 8 months, it's not just the presidency, it's the Senate too. And now I think it's not just the presidency, it's the Senate and the House. That you have to pay attention to, to see what the outcomes are going to be and what the implications for overall economics, overall politics, overall society, and thus gold and silver. So the election's important, but the election is taking place in the context of those big three problems.
You've many times talked about gold and silver manipulation and how you don't believe the prices are being suppressed. Now, we've seen different revelations coming out that, JP Morgan, Scotiabank, Merrill Lynch, other banks are settling cases with respect to spoofing precious metal markets. Now, spoofing isn't the same as suppression. So I'd love to get your perspective. Do you think precious metals are suppressed, and why or why not? And what is your take on the recent cases?
Look, I have a 2-hour presentation that we make to clients saying, here's the evidence of suppressions. This is why none of that evidence holds up to scrutiny. This is the evidence that suppressions don't occur. And this is the reality of it all. And so that's a long discussion. But if I can try to be brief, I don't believe in suppression. If you look at it, you've gone from this grand conspiracy to spoofing. And if you look at the fines that have been paid, in Barclays and I think JP Morgan's, I haven't really looked at in detail at the massive multi-100-page settlement. In the case of JP Morgan, most of the fines and most of the problems were in securities and bonds and fixed income. And gold and silver were relatively small. And it was almost all spoofing. And the fines that the bank paid were for lack of supervision. If you go back to the Barclays settlement, which was one of the first ones in precious metals, they had a trader who was trading against his client in the gold options market. and he was trying to push the price down or up. I can't remember if it was down or up. He wanted his clients' options to expire worthless so that he could keep the premiums. And when they investigated it, Barclays was fined for non-supervision. And in the investigation, they found that the bullion trading desk didn't even know what he was doing. I mean, he was sitting six feet away from them. And so not only was there not a conspiracy among banks to screw the market, there wasn't even a conspiracy within Barclays. It was a rogue guy just jerking the market around. Now, markets always have people jerking the market around. You can find that anywhere. You definitely find it in the stock market. You find it in other markets. Salomon got into trouble in the treasury markets in like 1992, 1993. You always have those people doing that. And spoofing is particularly problematic because spoofing is based on motives. If I'm making transactions, there's a value for me to have a ladder of things, and I can look to fill. And you even have Dutch auctions that are used to get the best price exactly because people will ladder in their bids or their offers. So spoofing is a problem because it mimics something that's a legitimate business practice, and the difference is motive. Now, in almost any other crime, a prosecutor doesn't have to prove motive, just has to prove that you did it. But in financial crimes, it all comes down to motive. Why did you have a ladder of bids? Well, because I was looking to get filled at the best possible price. Okay. Why did you have a ladder of bids? Oh, because I was spoofing the market. Once you get filled at the best possible price, you liquidate, you close out those other things. So spoofing is very difficult to prove. And I've seen cases where there's no data that supports the idea that spoofing affected the price, but there is a audio or a written recording where the guy says, let's hit the market. So you say, well, what's the damages? Well, there weren't any damages because it was a total failure. I've seen cases like that in metals markets where we've been the expert analyst looking at the data. You can't find things. So spoofing's a difficult thing, but it's very small. It's not a grand conspiracy to suppress the price.
So kind of what I'm hearing you say is that we're seeing isolated incidents of spoofing, but that doesn't mean that within a bank or within the whole connection of banks, there's any grand conspiracies. Is that kind of what you're saying?
That's exactly what I'm saying. Yeah.
Yeah, I really appreciate you sharing your opinion on that. I want to get everyone's opinion on this topic. So one of the things before we let you go, if we could get your take on, if you have the time, just to kind of look forward here, with the pandemic going on, the political division, the economic recession, where do you see precious metals heading? Do you have any price predictions currently?
Yeah, well, we take our price projections out 10 years. Some metals like platinum, palladium, we're taking them out 30 years right now to 2050 because of the nature of the transformation going on in automotive propulsion technologies. It doesn't show up in the next 10 years. You have to take it out to 2050 to really start seeing significant differences. But in gold and silver, our expectation, and it's well publicized, I mean, we have, well, first off, we turned bullish on gold in November of 2000. We issued a sell recommendation in January of 2012. We issued a buy recommendation again in 2013, a little bit premature, and we're still long, in our recommendations for gold and in silver. And our view had been that we would see another leg up, similar to what we saw from 2000 to 2011. And I think that we're about halfway through that leg. So our expectation is that gold and silver might sort of find a plateau 2021, 2022. We think that the economic environment will be somewhat better and there'll be efforts to stabilize things. But then once we get into 2023, 2025, we think that we'll have another round of economic volatility. It's very difficult to say when's the next recession. You can say with 100% certainty there will be many more recessions to come. But saying when they're going to occur, what the trigger point's going to be, how deep and how long they are, that you cannot econometrically model uh, effectively. So that said, people don't pay us to do econometric modeling. They pay us to project the gold and silver prices. So we put a wet finger in the air. We do a lot of work and we study a lot of this stuff. And we think that we will see another wave of economic and financial instability circa 2023, 2024, which just happens to coincide with the next presidential election in the United States, and a lot of other problems. And that you could see the gold price get to as high as 2,800 on an annual average price, nominal, by 2024 or so. Silver prices, we have them going up to about $46 on an annual average price. And let me just put those annual average prices in context. In 2011, 2012, when gold peaked at, like $1,900, I think it was $1,899 or something, the average price was something like $1,600. Yeah. In silver peaked at $50 and the average price was about $36. So if we're saying $46 average price for silver, you can sort of say, well, what's your intraday high that you're projecting? And the answer is we're not that crazy as to project that.
Yeah, definitely. But it does seem like you're seeing if we're seeing about 2,800 for gold, 46 or something in the 40s for silver, then definitely a reduction in the gold silver ratio.
Yes, because silver is more volatile than gold. We did a study this summer looking at silver price appreciation relative to gold price appreciation during gold bull markets. And silver in past previous bull markets for gold and silver, with one exception, silver outperformed gold. It starts late, but it finishes stronger.
Definitely, it does seem like that's the way it always happens. Is silver kind of plays catch up when we see a gold bull run. But Jeff Christian, thank you so much for joining us today. Before we let you go, any last thoughts you'd like to add, and where can people find you online?
You can find us online at cpmgroup.com. We have a lot of research and consulting services. We also have trade recommendations, which are shorter-term gold trade recommendations that we make available actually at no cost through GoldX app and through Kitco. And then we have shorter-term trade recommendations on silver, platinum, palladium, copper, and oil that we sell to investors. And there's an email address called info@cpmgroup.com. People can go to the website, sort of see what we do, read some free downloads and stuff like that. And then they can send us an email and say, this is what I'm interested in.
Awesome. Well, Jeff Christian, thank you so much for your time, and God bless.
All right. Well, thank you. And thank you for having me.